Hello, everyone, and welcome back to the weekly MMA Cycles Market Update. This is Gianni DePocha, your host, and it's great to be back with you on this Friday afternoon. It's been a pretty bullish week for equity markets overall. We had the lowest inflation CPI print in 2 years this past week, and we also had the Federal Reserve pause on any additional rate hikes. So this sent stocks soaring higher, but we knew that the central bank and inflation was going to be at the center of this week's discussion per the geocosmics as well. We started off the week with Pluto retrograding back into the sign of Capricorn, where he spent basically the last, what would that be, like 15 years almost, since 2008. And then we also had Venus square Jupiter on the same day, and then Mercury ingressed into the sign of Gemini. So that's what took place last week geocosmically. Let's go ahead and take a look at a chart of the Dow Jones here. Really bullish price action, trading near the highs of the week here on Friday. I posted this chart on my Twitter account for everyone to see, and Ray even commented on it. We've been looking at this potential inverted head and shoulders price formation on the Dow Jones. Typically that's indicative of higher prices to come. Now, looking at the week ahead, we do have Saturn going retrograde on the 17th of June, and then we're going to have Sun square Neptune on the 18th, and then the following day, we're going to have Jupiter sextile Saturn. So markets will be closed on Monday for the holiday, so we're going to have a shortened trading week, but we did see tech and the NASDAQ also do well, but a little bit of profit taking here in the NASDAQ on Friday. The next big Uranus aspect is not until the 26th of June, and we know that Uranus rules tech, and needless to say, there's been no shortage of breakouts taking place in this tech-heavy index. Let's take a look at the 10-year Treasury yield, TNX here. Rates still in congestion mode. It comes down to whether we've seen the 2-year cycle high or the intermediate term cycle high in the 10-year notes. That would be, in this case, a 2-year low that we're looking at in TNX, because when interest rates go up, bond prices go down. When interest rates go down, bond prices go up. So with the latest inflation reading that showed inflationary pressures at their lowest level in 2 years, you would think that bonds would rally and interest rates would fall, but we didn't really see that take place. And so that, to me, signals that there's a degree of skepticism still in the bond market with respect to inflation. So we know that the central bankers were totally off the mark when it came to transitory inflation in 2001 and 2022. So should we just buy their narrative when it comes to inflation being defeated? Now, I do think Fed Chair Powell is hedging his bets because he did leave the door open for a couple more rate hikes later this year. But that poses the next question: is why would the Fed continue to raise rates if inflation was defeated? Well, I suppose we will have our answer in due time. But with Saturn turning retrograde this weekend and Neptune turning retrograde later this month on the 30th of June, there could be some questions or shifts in our perceptions of reality surrounding inflation. Inflation is ruled by Neptune and Jupiter. Reality is ruled by Saturn. Keep in mind that this time last year, in June of 2022, that's when we saw the peak of inflation CPI data and the peak of inflation hysteria. So we know that the primary driver of inflation expectations is crude oil. Nice finish to the week here. This is USO, the crude oil fund. We cover this in the MMA monthly ETF report, which will be published next Wednesday on the 21st. So we know that if crude oil starts to run again, it could lead to a reignition of inflation expectations. And I think the Fed would really be trapped between a rock and a hard place at that point. The fact that we haven't seen any measurable deterioration in the labor market is definitely stumping the central bankers right now. I do want to take a look at some grain markets this week because we see corn and beans skyrocketing off of intermediate term cycle lows. Corn rallying to its highest level since February. We're looking at the corn fund. Here, if we look at the fund for beans, we see beans just exploding higher, massive short squeeze. So again, seeing these types of moves in the commodity markets doesn't really say to me that inflation is over yet. So it really just depends where the next high forms, but this is something to keep in mind over the next several weeks. Let's take a look at GDX, the gold mining ETF. We do also cover this in the monthly ETF report. Still consolidating here trying to hammer out a secondary high or low, which would reinforce the bull trend that's been in effect for the last several months. So we know that Ray is the master of precious metals. So I would encourage you to check out his commentary in the weekly report as well. Let's take a look at the US dollar. We're going to look at the UUP ETF. We sold off for most of the week, but catching a little bit of a relief rally in the dollar here on Friday. So it's still a pretty range bound market and likely hanging on a whim per what the central bank is going to do in the back half of this year. So I think what we need to keep an eye on when it comes to interest rates and the value of the dollar for the remainder of the year is that Venus retrograde period between July 22nd and September 5th. I think that we could see some big shifts in monetary policy expectations at some point during that time. And last but certainly not least, taking a look at Bitcoin. We rallied to a new multi-month low, or declined rather to a new multi-month low on Thursday, but rallied to close up nicely higher in the day and seeing that follow through on Friday. So we'll see how that carries over into the weekend. But right now, Bitcoin's still in consolidation. And typically consolidations within trends are bullish price action, but we know that there are some other potential headwinds that we will discuss in the monthly ETF report and our weekly commentary in the cryptocurrency space as well. So that takes care of all the markets that I wanted to review with you today. So thank you so much for spending some of your time with me today. A couple of announcements. As I said, the monthly ETF report will be published next Wednesday, the 21st. On Monday, we'll have the MMA monthly Shanghai report published as well. And then next Saturday, June 24th, we will be starting course 3 of the Merriman Market Timing Academy. So we're going to be continuing our studies on geocosmics and shifting more towards an emphasis on short-term correlations with geocosmics and reversals. So if you're more of a short-term trader and interested in our work, I think that course 3 is a really good option for you to see how we interact with geocosmics and reversals with respect to planetary cycles. So that takes care of everything that I wanted to review with you today. Thank you so much for watching. Check us out at www.mmacycles.com, and we'll see you same time, same place next week. Bye-bye now.